Are you looking for a program to start a business, grow an existing one, or manage your personal finances? Your search stops right here. Join Mukonki Mukonkela from Inside Partners Africa every Tuesdays at 0720 hours on the Dalama Insights Business Show, a program that gives you the best and most practical, actionable insights.
Yes. That pretty much sums it up. Welcome to another insightful episode of Dalama Insights, where we break down financial matters in a way that helps all of us make better money decisions. My name is Lina Zulu, and today we're discussing a crucial question for investors. Should you shift your money into stocks or stick with bonds when interest rates are changing? Now, the Bank of Zambia has been raising the monetary policy rate to fight inflation. Now, normally, when interest rates go up, bond yields should also rise, making bonds more attractive than stocks. But here's a surprise: bond yields in Zambia haven't really increased as expected. So, what does it mean for investors? Should you shift your money into stocks or stick with bonds? This is what we're trying to debunk today. And joining us in studio is our usual financial expert, Mokonki Mukonkela from Insight Partners. Welcome, Mokonki. How are you today?
I'm okay, thanks, Lina. How are you doing?
I'm well.
That's nice.
Yeah.
Can I just say good morning to everybody watching online and those listening, those on the buses? Good morning. Today it's a very interesting topic, eh?
I think I'll ask that you send a special shout out to Mr. Mloa.
Mr. Mloa. There are so many. I think
Yeah.
one day we'll have a program just for shout outs, eh?
Yes. We're just
Appreciating.
like if they have questions, like you just address the questions that they have, whatever concerns they
I
have.
think so. We should
Yeah.
do that, eh?
Yeah,
Q
that would
and
be
A.
fabulous.
Q&A with Moko. So watch out for that.
Yes. So let's delve into it.
Yes.
Generally, interest rates, let's start with the basics.
hmm
How do interest rates usually affect stocks and bonds?
This is very interesting to understand. As you know, the Bank of Zambia has regularly revised the MPR, which is the monetary policy rate or base rate. Every quarter, they have a meeting where they review this rate. And just recently, it was increased to 14.5%, I think, or 14%, somewhere there. So, how does this affect your investment in the bonds and stocks? What is supposed to happen naturally is that when the MPR goes up, the cost of borrowing also goes up. And in terms of the bonds, we expect the competitive bidders that are participating in the auction also to offer competitive rates for the money they are lending to the government, which is the GRZ bonds.
Mm.
So that is what we expect. So, for example, if last month the MPR was at 13%, and then this month it's increased to 14%, we expect coupon rates also to go up because the cost of borrowing has gone up. But then this is not really what happens, but that is what is supposed to happen. And then with the stocks, when the interest rates are going up, the MPR base rate is going up. Naturally, the banks also revise their loans upwards. We've seen that through the advertisements that they make in the newspapers. You always receive a message if you've got a loan from a financial institution that your loan is going to be increased upwards because of the increase in the MPR. So this results in an increase in the expenditure for businesses because their borrowing cost is increased. So they will have to pay more in terms of the interest rates on the loans that they've acquired to maintain or run their operations. Businesses borrow money to run operations. And so when interest rates are going up, it affects businesses because their cost of borrowing goes up. And as a result, we expect the stocks prices to slightly be affected. So during this period, we expect that stock prices might not perform as good. They might even start coming down because of the increased borrowing, and that companies will need to return money into the company to maintain their operations. And so this is the normal way interest rates or the MPR is supposed to affect the bonds and stocks, Lena.
All right, so that's in a
Mhm.
normal situation.
Eh, eh.
Interest rates go up, stocks go down, and bonds become more appealing.
Exactly. Bonds are supposed to be more appealing, especially around this time where we've seen an increase in the MPR frequently. Bonds are supposed to be very, very appealing. For example, if you had a 15-year bond last year at 27.7%, this year it's not supposed to have come down to 22 point, I don't know if it's 5%. It's actually supposed to be way above the 27.7% that we used to enjoy last year. That's in 2024. But that is not the usual pattern that we are seeing.
Right. All right, so let's address that elephant in the room a bit more.
Yeah.
After the Bank of Zambia raised the monetary policy rate, like you talked about,
Hmm.
then the bond yields haven't gone up as expected.
Yeah.
Why is this happening, Mukonji?
So I've speculated a lot around this, and for those that are interested, I actually did a full YouTube video on this. And we'll still continue speculating, but there are some reasons that the minister has given himself. And one of them is, and Bank of Zambia, they say there's demand for the bonds. In the past months, we've seen oversubscriptions of bonds, Zambia and GRZ bonds. And so this got me into doing detailed research. And I actually came across a very interesting article online from an e-library. It's an IMF website. It's called e-library IMF. I'll share the link in the video after this program for those that are interested in following the article, Lina. So what I've discovered there is that foreign investors are actually interested in the Zambian bond market because we've got very attractive rates. Really, if you look at our rates, even though they are coming down compared to other countries, particularly developed countries, our rates are very, very good. And so foreign investors, 20%, they get like 4%. They get like 5% on their bonds. In Zambia, they are getting 20, even 20%, even 10% for them.
That's
Is
a
just
lot.
so good, ignoring the exchange, risks. But just the yield rate itself is so attractive. And so we see foreign investors being interested in Zambia's bond market because of the investor confidence that they are gaining. They've seen the debt restructuring and all the effort that government has put in. They are seeing Zambia as a good market to be in. And so they are coming back. So this is a reason that I discovered from the e-library IMF website. So there's high demand for bonds because foreign investors are now seeing the Zambian bond market as attractive. And that's why we've started seeing oversubscriptions in the bond market. And also, the people that determine our coupon rates are large institutional investors, pension funds, financial institutions, and individuals with a lot of money, above 500,000. So these investors may find the bond market still very attractive compared to other investments. And so they wouldn't really mind even a 22.5%. I mean, these are some of the reasons. And then the other one really is inflation. You see, with the constant increase in the prices for goods and services, you want to be certain that your money won't lose value.
Right.
And bonds give you that certainty in terms of you get back your money. Yes, inflation will affect your money, but in terms of capital preservation, if you invest 50,000, you get back 50,000. It won't be less for whatever reason. So these are some of the reasons that I'm speculating. But then with the IMF article that I read, I think it really confirms my speculations in terms of the foreign investment interest. Other people in our group, Lina, have actually said perhaps Zambians now are also starting to invest a lot. So even the demand from the local Zambians.
The oversubscription
So-
says it all.
So I'm saying, but what? So is this a wrong thing for us to talk about Zambians investing in? But should we stop?
No, keep pushing. That explains a lot and makes a lot of sense, really.
Yeah.
So with bond yields not increasing much at the moment, that like you've explained,
Yeah.
does that mean that stocks are still a good option? I mean, for those that are listening in right now,
Yeah.
what should someone consider before choosing between stocks and bonds?
That's a very good question, because with the drop in the coupon rates or yield rates in the bonds, the question really is, where else can I keep my money and still maintain my 27.7% that I used to get on this 15-year bond? And shares start looking attractive. So, what about these shares? I need to learn more. So what helps you determine where to keep your money is really dependent on yourself, but you need to consider a few things. When you look at bonds, you normally invest in bonds because of stability. We invest in bonds mainly because we want to keep our money safe. So we are preserving our money. So bonds are normally a safer option compared to other investments, even with lower yields. But I always like to give a guiding hint. Whatever investment you're making, ensure that the return or interest rate is above the inflation rate. So our inflation rate stands at 16.7%. So even as you are selecting bonds, ensure that the coupon rate, yield rate, or interest rate is above the inflation rate. At least that will make sense for you. And then for stocks are investments that give you higher returns in the long term, but they also come with higher risks. Because they are dependent on the performance of the company.
Right.
So the returns
That's
on
what we discussed last week, yeah.
exactly. So the returns on the stocks, Lena, are not guaranteed. It's not like the bonds where the interest rate is fixed. We know that GRZ is supposed to give you 20% and your capital back 50,000. That is not how it is with the stocks. With the stocks, you don't know what dividend you're going to get. It can fluctuate from one year to another.
Yeah.
It is not ever the same, unlike the bonds. And so as you choose, you really need to look at your own risk appetite whenever it comes to bonds, but always invest in companies that can withstand economic shocks. And that's where you need to really start understanding companies listed on the Lusaka Securities Exchange. And then finally, you can actually invest in both. This is what we refer to as a balanced portfolio. You don't have to restrict yourself to just the bonds, but you can have a little bit of the bonds and a little bit of the shares. That way you build a portfolio that is diversified. So whenever the bond market is doing well, the shares are perhaps doing better, and inversely the same can also apply. So you don't and say I'm just for bonds alone. No.
Of both.
Yes, balance your investment
Depending on your goals, yeah.
And depending on your financial goals, like we've always said now on this program, whatever investments you're making, always match them with your goals. Very, very important.
Right.
Yeah.
So given everything that we've discussed so far, what are some of the smart strategies for investors in this changing market?
One of them is particularly for bonds, consider shorter term bonds, because if analyzing the February bond results, I actually not, because I love the long-term bond, the 15-year bond, for the coupon rate, because it used to give me a good coupon income. But then if you look at the 15-year bond now compared to the 10-year bond and the 5-year bond, there's really not much difference in terms of the coupon rates. And so rather than exposing yourself to inflation by buying longer term bonds, the mid-term bonds are much more attractive at the moment. Remember, this always changes. You never know what will happen next month.
Right.
But at the moment, the 5-year bond for me looks a little bit more attractive. And then in addition to that, don't just put your money on bonds. Also consider stocks, which is why last week I was looking at the stock market and dividends. You can identify good companies on the LUCE that are performing well generally and that also pay a dividend. Because in Zambia, if you buy a stock that doesn't pay you dividend, you will have to wait a very long time for you to see the capital appreciation in the share price. And this is the nature of our stock market. It's a small market. We expect this in such a market. But look out for stocks that are dividend paying. I mentioned the top 3 last week. You can watch the video that we did last week. But you can also analyze dividend yields of other companies that have even lower share prices, so that enables you to enter into the market as a beginner. So look for good companies that are dividend paying and that are strong in terms of their financials, very solid, and cash flow, as well as stable earnings. Another advice that I'm now adding on now is keep a little bit of cash in your savings account. I know I've always said savings account don't earn you anything, but listen, with all these uncertainties, you want to have some little bit of money to jump quickly. You don't want to put your money into a 5-year bond and then you find that perhaps it's lucid as some miracles and we've got cobalt mine listing on the Luce suddenly, or maybe some other companies listing on the Luce. I know Luce is planning to list like 5 companies. We heard this news last year. And then you suddenly see all these companies listing. Maybe you could be fortunate and be one of those, initial investors into these companies and become a millionaire a few years later when the share
It's
prices
possible.
go up. It's very, very possible.
But I hear a but. It's possible, but
So I'm always against keeping money at the bank, but this time around, keep a little bit of it at the bank in the savings account.
we have
Just
changed goalposts. No, but we have to be safe. So yeah, I totally understand.
yeah.
That's great advice. Really, really solid advice. So no need to panic. We need to, stay strategic with our investments. Yeah, that's what we're saying this week.
We have to be strategic, and that's why you investing. No wonder this program is there, and I don't think it's going to come to an end anytime soon.
Right.
Because investing is
Money
not.
matters every day.
It's and things change. Goalposts are always changing. Can you imagine playing
And you have
soccer?
to think on your feet.
Can you imagine playing football, right? And then the goalpost is always changing. Like, where do we kick?
Yeah.
Where do we score?
Yeah, I understand. All right, so today we explored how, rising interest rates normally push investors towards bonds,
Yeah.
but then Zambia's situation is a bit different, like Mukongi has explained. So despite higher monetary policy rates, which we have all now come to know, I think we're very familiar with this word. Bond yields haven't risen as expected. So this means investors need to think carefully before deciding where to put their money. Let's get your nuggets, your last thought today. What are we taking away?
Thank you, Lena. I just want to conclude that whatever investment you make, you always need to understand the risks that are embedded in that investment, and we will help you on this journey. And also to remind everybody that every Friday, Saturday, I have a training where we go into the details and actually discuss this and offer personalized advice. So Fridays in the morning, I learn about shares. You can find the link to register and pay online. You can actually pay online using your mobile money or your bank. So if you go to insidepartnersafrica.com, anywhere you actually find the link that takes you to our online training classes. There's a lot of insightful information to learn from there. On Saturday evening from 18 to 21, we are looking at how to invest in GRZ bonds. So these are very useful content. And also, Lina, just a quick one, sorry. Last week, I mentioned that I'm offering YouTube memberships. But unfortunately, after contacting YouTube, I learned that Zambia is not eligible. And so you cannot see the join button. It's only those countries that are eligible for the membership that are able to see the join button. So even though I'm still encouraging people to join the memberships, I've got subscribers from across the world, and there are some that have joined our memberships. But for Zambia, we have to wait until Zambia is part of the list that is eligible for memberships. However, we'll continue using this platform to disseminate information, YouTube as well. And as advised by Lina, I've created a Telegram group. So it's not a WhatsApp group, it's a Telegram group to give us much more interaction, where I can even do a video and share with the group. So that Telegram group is for only those people that support my work. You've attended a course before, you've bought an ebook online, and it's really an exclusive group of smart investors. I'm calling it an inner circle because this is for people that really have gone an extra mile and have appreciated the work that we do, Lina. So that's what we have. Thank you so much.
Beautiful. Great insights as always, Mukonki. It's always a pleasure hosting you on the show.
Thank you. It's always a pleasure being with you too, and everybody listening.
Tuesdays are brighter with Mukonki on air.
Thanks.
All right, so that's our show for today. That's Ndalama Insights, a good package for you. Remember that smart investing is about making informed choices. Until next week, on behalf of my guest, my name is Lina Zulu. Keep it locked to 4FM.
You have been listening to Ndalama